Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, I want to do a brief update on the methodology in action. We'll talk a little bit about my next 100 trades. And because we missed last week, the mystery chart is no longer a mystery. And I'll show you that in just 1 second. I want to touch upon, as I have been lately, where else I've been making a little money in the markets, because I really hadn't made a whole lot of money, or actually no money just yet, on those next 100 trades that I've been showing you. And this week, I really want to focus on understanding how markets really work for the Mind the Trade series. That's something I've been thinking a lot about lately. I've talked about this before, but I really haven't talked to you about it a lot. And so I thought now would probably be a good time to do that. And that'll make a lot of sense in just 1 second. Housekeeping, I do take requests, he tried to say. You can send them to DaveLandry.com/contact. If you want the slides from this presentation and all the other presentations combined, which have a lot of setups and a lot of rules and such, and walkthroughs, you can go to DaveLandry.com/StockCharts. I'll also send you all 3 of my books in PDF format and a lot of other stuff to keep you busy for a long time. These shows, as you know, are not live as of late, or lately, I should say. But I do continue to do a live show every Thursday night. I think shows are a little bit better when they're live because I get to interact with you and find out what you're thinking and what stocks you want to know about, etc. So feel free, or I'd love to have you at the weekly webinar, DaveLandry.com/webinar. Register even if the link is old. If you need to reach me at tfollowingmoron, that's Twitter. If you need to reach me at Twitter, at tfollowingmoron. All right, let's jump into it and talk about Mind the Trade. So let's talk about how markets really work. The market is really an emotional being when you think about it. And the reason it's an emotional being is because it's made up of a lot of emotional beings, and one of which is you, by the way. And it's kind of interesting, if you think about it, you can actually influence the market sometimes, even as a small trader. Sometimes I'll put kind of crazy limit orders out on stuff and get filled if somebody's looking to get in or get out. And sometimes people will fill me at the limit. And sometimes, especially in after hours trading, if I'm trying to get out of something, it's kind of interesting. I notice I'm on the bid or on the ask, whatever the case may be. So you in and of yourself can actually have some influence on the market. And I'll come back to that in just 1 second. Now, one thing that I find really useful is being cognizant of your own feelings in trading and in life can really help you to wrap your head around the emotional nature of the market if you don't believe it's emotional. Now, as I've been saying quite a bit lately, the secret is seeing what is, and a lot of that is separating the extraneous information from the market. And as I've said recently, your life and your recent trading and not so recent trading can really influence your trading decisions. So let's say the market is just chopping sideways and you're busy focusing on all these things that have an influence on your trading that have absolutely nothing to do with the market, and the market is just chopping sideways. You might need money and think, I really need to make something happen, even though there's nothing there. But your mind might tell you that that market is in an uptrend. So the real secret to trading is simply seeing what is and trying to separate your life and your recent trading, and as you saw in the prior slide, your not so recent trading, from what's actually happening in the market. Now, one thing I often preach is you're trading traders, not markets. Tom McClellan, years ago at the AAPTA conference in New Orleans, gave a presentation where he talked about how you form a relationship between you and the company, so to speak, when you buy a stock. And you expect the company to do good things and, in general, have your interest, the shareholders' interest, in mind. And for the most part, every now and then there's a little trouble between the CEO and his secretary, or they cook the books or some things like that. But more often than not, they have your best interests in mind. Your bigger concern is anyone who bought that stock prior to you. And as Tom McClellan said, and those people will screw you. Now, the reason technical analysis works is because market participants often behave in an irrational manner. Yogi Berra once said if the world were perfect, it wouldn't be. And my corollary when it comes to markets for that would be if the markets were perfect, they wouldn't be. Unfortunately, as Mark Douglas once said, all it takes is one a-hole to screw up a perfectly good trade. There are people that could fat finger an order. There's a trading desk could do that, for instance. And it could also happen on a much smaller scale. You could be really close to being stopped out. Somebody could throw in the towel, push that stock one little penny lower, and then it knocks you out of the market. And you have no control over that person. And that's something that you really have to wrap your head around when it comes to markets. And that's why you have to be willing to exit a trade when it goes against you by an amount that exceeds your risk parameters. And those risk parameters, by the way, isn't what you're comfortable with, it's what the market dictates. So if a position requires a stop that's, let's say, 50% away from the current market price and you put a stop there, then that's what it takes. You just adjust your share size down accordingly. As I've said before, I've had stocks in my service go 400 and 500 and even 600%. It doesn't happen that often, but every now and then it happens. In almost every case, because these are more volatile stocks, when I ask people, it's like, well, did you get this one? They're like, no, I didn't take that one because you had like a 20% stop. Well, I adjust the share size down accordingly, and so that 20% is what the market called for. But anyway, before I digress too far, just remember, all it takes is one person to screw up a perfectly good trade. Now, here's the thing. The imperfect nature of markets is actually important, as I hinted to with the Yogi Berra yogiisms. The urges of others is what makes you profitable, provided, of course, you're willing to embrace your own emotions. And again, not to beat the dead horse, but separate anything extraneous from the market, your life, your recent trading, again, and your not so recent trading, and then see what is in the markets. And if there's nothing to do, then don't do anything. And by the way, the more successful you are, the harder it is to do nothing. And I couldn't figure that out for the longest. And finally, a client of mine who's also a psychiatrist emailed me and she said, I think I have the answer. And she explained it in a lot of details, and I've showed her quote before. But basically, if you are some sort of trained professional, a doctor, a lawyer, or automatic transmission mechanic, as I often use as examples, you have to take whatever client comes along, knowing that what you do could cause possibly more harm than good. All right, let's jump into the mystery charts and the methodology in action. Here's not a mystery chart. This was one that was supposed to be last week's mystery chart. It's EH, and those are the parameters for it. It's a little unorthodox in the fact that it did pull back to its prior breakout levels. Usually if you have a pullback followed by another pullback into that first pullback, I won't take the setup. But in this case, the volatility was extremely high. I don't have HV on this chart, but I think it was like at 120 or somewhere very high like that. But you can see it had a tremendous thrust from the lows in a very nice deep pullback. Entry was here, stop down here, initial profit target up here. So let's take a look at what happened. As you can see, it did trigger an entry. It initially looked pretty darn good, but unfortunately came back in a little bit. Now the swings on this thing have been kind of crazy. That was $870 profit, and then it came right back in, and then you ended up losing $780. But we haven't stopped out yet, and with today's action, the market rallied back up, and now we're back nicely in the plus. Knock on wood, of course. Now let's take a look at where we left off 2 weeks ago. I had two stocks still on, 9 and ROIV. Both of these are in my trading service, and the ones that you see core are core methodology, and for now are coming straight from the trading service. I will show you an IPO in a minute. I haven't been tracking the IPOs in this because the reason is, with the trading service, I'm showing these setups ahead of time, and I want to make sure that everything I show you is ahead of time. Now, I might start putting trades in here for my Facebook group, which some of those IPOs we do talk about ahead of time. But for now, I'm going to stick with the core methodology, and we'll see how it shakes out. So again, that was 2 weeks ago because we missed last week's show. And you can see we're at negative 1753 since we started this experiment, we're on trade number 13. Now this week, we're on trade number 14, the EH, which bounced back as I'm doing this recording. And so that looks a little bit better. So this number was actually much, much uglier down here. So we did have a negative or a downtrend from the last observation. So now we're at minus 2788. So far, not so good. But you got to remember two things. One, I am doing some other stuff too, and I'm doing that in more than one account. Of course, that's going to exacerbate these losses. But the reason I'm not worried is occasionally we do get a big home run that makes it all worthwhile. That big aforementioned 300, 400, 500, and occasionally even a 600% gain. And that's the tough thing about trend following. At one point in time, I need to do a show just on that, what to expect in trend following. People ask me all the time what to expect in my service. And I tell them, expect not to make a lot of money and maybe lose money for 6 to 8 months, and then all of a sudden knock it out of the park. But expect to give up right before that happens, unfortunately. So trend following can be tough, and eventually I'll do a presentation just on how tough trend following really is, because it's really hard to hang on sometimes when these things are going against you, but that's exactly what you have to do. Also, by the way, the only way to make money in a market is to capture a trend. Go in and watch some of the old shows where I walk you through a lot of those things. So the question is that all I'm trading? No, I'm actually trading quite a few other things right now. We talked about in the last show the buy at B in ATAT, and this is one we did talk about in Facebook right around the trigger. And I ended up with 400 shares of this one. And you can see there's a trade up there. Flipped out a couple hundred shares at a 2-point profit. And then so far, I'm still in the rest of those shares. And so far, so good on those. Now, keep in mind, I do take a lot of trades in other accounts. And in this case, I think that's the only shares that I have. But like in some cases, if you see me in like a service stock or something, if it's doing fantastic, I'm also doing fantastic in other accounts. I tend to show a lot of my trades here from what I call my model account, just to show you the methodology and action, and that I'm actually doing this stuff. Now, as I said recently, crypto's really been heating up. So here's one that I took, and you can see it triggered. I triggered in on a pullback right around here. It hit the IPT, and then I've since gotten stopped out of this one. But right now, my current portfolio in crypto, I have, I think, 7 that have hit the initial profit target, and I'm free rolling on those. And that's the secret to longer term success in trading, is getting in, getting your initial profit target out, getting your stop to break even, and then trailing a stop on the remainder. Now, one thing that's been kind of interesting in crypto has been the 230 EMA, or any type of breakout system for that matter. I'm not a huge breakout trader. I tend to avoid trading breakouts. Sometimes with my intraday stuff, I will trade breakouts. And sometimes in markets like crypto, when they get really hot, or markets like stocks, back in 1999, of course, when they were super hot, you could just buy the strongest stocks. Right now, you could buy the strongest crypto pairs. Just make sure you have 1, an initial profit target in place, and 2, a chair ready for when the music stops. Now, getting back to the 230 EMA system, just a simple little system, and it works really well, at least right now in crypto, because crypto's sort of going crazy. And what you want to do, as I've said before, is you need 2 bars of Landry light. Landry light is lows greater than moving average, so you need upside Landry light, and you're going to enter above the 2-bar high plus a little bit of wiggle room. So there's bar 1, there's bar 2, bar 1, bar 2, looking at the Landry light indicator. If you're an ACP, if you have ACP, I can't help you on that. I can't help you in the price on that or anything, because I'm not affiliated in that manner with StockCharts. But if you like this video, you get the plugin for free. So just click down here and load that plugin up. I've gotten a lot of positive feedback off of that plugin. A lot of people are really enjoying it, and a lot of things like Landry light have really helped people to see trends, so I'm pretty excited about that. I know I'm a nerd. So you got 2 bars of Landry light, and you want to give it a little bit of wiggle room. You can find sometimes market will come in and take out a 2-bar high and then come right back in. So you want to give it a little wiggle room to try to avoid being triggered in on noise alone. So there is the buy signal in Ethereum based on that. Here's Bitcoin way back here. If you squint your eyes, bar 1, bar 2, above the high, plus a little wiggle room. So there was your buy on Bitcoin. Now, if we zoom that in a little bit, you can see the Landry light a little better. remember this little indicator down here, or as I call it, an illustrator, it just helps to show you what's actually in the chart. So bar 1, bar 2, this means the lows are greater than the moving average. It's a little hard to see. I have my reference line set to 10. If you're doing just normal trend following stuff, after about 10 bars, that's a good place to start looking to get in the trend on something like a pullback or a trend knockout. And again, see prior shows for a lot of the patterns and a lot of the concepts that I'm talking about. So 2 bars of Landry light, you want to enter above the high plus a little bit of wiggle room. So right there would be a plausible entry in this particular case. And this is just a zoomed in Bitcoin, which we just looked at. Now let's take a look at, this is what I call one of my gym trades, and I borrowed that term from Linda Rasky. She had a client years ago that traded a certain pattern, and that's all he traded. And then he would go off to the gym, and he was pretty successful at doing this. And in this particular case, it worked out pretty cool. But let me show you the original 230 EMA before we get to that. You can see bar 1, bar 2, and above those 2 highs, plus a little wiggle room. So the buy would have been on that bar there, and it really took off nicely. Now, the reason I'm saying the gym trade is, I think it was on this day here, I bought as this was breaking out to new highs, and then I had IPT up here, 20% higher, and I did that right before I went to the gym, and when I got back, I was nicely in the profitable column, and half of those coins have been sold at the initial profit target. And I'll walk you through quite a few of those examples in upcoming weeks. I had 7 in my open portfolio, as mentioned earlier. I'm not sure how many of those were over the last couple of weeks, but I'll take a look at everything. A lot of them were probably less than 2 weeks, I would say. The turnover has been really crazy in the crypto. Now, I'm not a mechanical trader, and that's sans some possible longer-term market timing, but I'm not really doing that. I'm not really putting my entire portfolio into the market and timing the entire portfolio. I am doing a little bit of that with, let's say, like my daughter's college funds, or what's left of the college funds, I should say. But for the most part, I'm not doing that type of mechanical trading, but I am keeping an eye on those mechanical type of systems to help me know where I am in the markets for my other systems now, or other trading, I should say. Nor would I now. So I'm not a mechanical trader, nor would I trade the 230 EMA mechanically. However, when the altcoins or any other market really, really heat up, a breakout method like this one, or just buying the ones that are going up, straight up that is, can work quite nicely. Now, the reason, by the way, I'm not a huge breakout fan is more often than not, breakouts fail unless you're in a really, really, really hot market. And in crypto, all I'm doing is sorting the pairs by the percent change, and I'm looking to buy the strongest pairs. And I immediately, and I'm not doing the math on the volatility like I would in the stock. With crypto, I just immediately look to flip out half of the coins at a 20% profit. And as soon as I trigger in, I put that order in, and if that 20% gets hit, then I'm pre-rolling, and I try to hold on to that position as long as I can and not let it dip too much below my entry price. That way, no matter what, I still have a profit on the position. But again, a breakout system can work really well when a market is really breaking out. So this is the trade I wanted to show you earlier. I've forgotten that I put it in here. A little mixed up because it's been a couple of weeks since I've done a show. But anyway, the buy was, believe it or not, right there. This thing was going straight up. And so I bought it right there. And then I sold half at 20% higher. Now, a lot of times these things will spike up and come right back in. So you really need to make sure you have that order in at a limit. And by the way, don't bet the farm on these things. I think there's a reason they call them the S-word coins. I keep asking for permission to call them different things that other than altcoin, and I haven't gotten it yet. I have a nickname for them that I thought I could get by with, but I better not try it this week. But anyway, there's a reason I stick to that name is because, you know, these things are mostly crap, pardon my French here, but that doesn't matter. In fact, that's actually great, believe it or not, because they can trade without pesky fundamentals and earnings and all these other things that might affect the markets. And people just are very emotional about them, and as we said earlier, markets trade on emotions, and that's the great thing about the altcoins right now. Now, keep in mind, again, don't bet the farm. I think probably more exchanges have gone under than have stayed afloat, so be super careful there, and I would imagine should these accounts continue to grow, I might pull a little bit off and get them off of the exchanges, because you don't actually own these coins if they're on the exchange. The old saying, not your keys, not your coins. Well, that's true. And that's how a lot of exchanges have gotten into trouble. So just be super, super careful. I've done presentations before where I have a picture of a goat in a business suit. And it's like, I don't want to be the Judas goat that leads you people into this stuff. So buyer beware on these. Yeah, they're all crap, but you could make a lot of money in them. And as I've said ad nauseum, by accident, I've gotten on somebody's newsletter, and he's been poo-pooing Bitcoin since 3,000 or 4,000. It went to 60-something thousand or whatever. It came back down, and as it started to come back down, he's like, you see, I told you. And I'm like, well, I thought to myself, it ran up a few $1,000% before it came back in, I did okay in that run. Don't confuse the issue with facts when it comes to trading, and your life is going to get a lot better. This is the intraday trading I was talking about a while back. This was actually a pretty good week, obviously. It's not always this good. The point I was trying to make is when you have these nice trend days where the market starts at one end and ends at the other, you can actually do pretty good there. One other thing I want to show you real quick. This is the TFM 10% system, and it's starting to catch up with the market, because this line here is based on a 50-week closing high, and we've been in this bear market for 50-something weeks, so this line has now begun to drop. And remember, a buy signal is a close above the buy line and two lows above the 50-week moving average. The two lows above the 50-week moving average are 2 weeks of Landry light. That's a whipsaw filter, and the buy line is just simply our performance filter. So we want to get out of the market if it drops below the 50-week moving average and it drops below the buy line. You can see it got you out right here. And this little indicator down here, or illustrator down here, shows that by getting out, you would have saved about 25% drop, avoided a 25% drop in the market. So the idea of the system, borrowing a term from Ian McActivey, who's no longer with us, unfortunately, but the getting out when it drops below the buy line and below the 50-week moving average is to help avoid the diaper change type of moments. When you're down 20 and 30 and 40%, it gets pretty scary in the markets. It's a lot better to be out of the markets, as I often say. It's better to be on the dock drinking beer, wishing you were out to sea, than out to sea, wishing you were on the dock drinking beer. And believe me, I've been there. I've been in a few boats that have sank offshore, one about 200 or 300 miles off of Bermuda, and it's not very fun. So anyway, the reason I want to show you this once again is the buy line is catching up with price. So over the next 3 to 4 or 5, maybe a little bit longer, it depends on the market, but over that period of time, we could get a buy signal really soon. And one other point just to throw out real quick, the way I see technical analysis is performance-based investing. Now, I'm slotted as a swing trader, and I made some trades earlier today. I was in for a few minutes, but I will hold positions, especially the swing trade positions, as long as they move in my favor. And sometimes I end up with a position for weeks, months, and believe it or not, even years. And that's a secret to longer-term success. Again, getting that initial profit target out and then trailing that stop and hanging on for a long, long time, because that's where the money is in those longer-term trends. But anyway, the point I'm trying to make here is everything is performance-based for me. So this simple little system is performance-based. The market has to begin to improve for us to buy it. And conversely, or on the flip side, I should say, when it weakens and drops below the buy line and below the 50-week moving average, we just get out of the way. Now, every now and then we get a whipsaw. As I preach, whipsaws are frustrating, bear markets are devastating. You could survive frustration. That comes from Greg Morris. So every now and then you get a whipsaw, but that's okay. The main thing, or the main feature of this system, is that so far, knock on wood, it has taken you out of the market before every horrible thing that has happened. There's no guarantees, obviously, that it will continue to do that, but so far, following something like this would have gotten you out of the market before every crash, before every bear market. And so it's really cool that something just so simple could work. And that's kind of my ultimate goal, is to simplify as many things as possible. And that's why I call this show Trading Simplified. Now, one more thing real quick with the Landry light. As I say quite often, it can really help to keep you on the right side of the market. One thing I like to look at here, A nice little tool is a 30 EMA, exponential moving average. And as I've been saying quite a bit, all year long for 2022, or most of 2022, I should say, was red during that bear market. So it's one more little tool you could use to help keep you on the right side of the market. And in more recent times, we have a week or two of green. So let's see if that can turn into something a little bit bigger. Now, if we zoom the chart in, you can see that the Landry light's a little bit more evident. We've been red for most of the year. And again, we're just starting to get a little green now. Well, that's all my time for this week. I want to thank everybody for watching. Again, if you would like some follow-up information, enough to keep you busy for a long, long time, including a mini market timing course. I always forget I throw that in. But including that and all my books in PDF formats and a bunch of other stuff, go to davelandry.com/StockCharts. Again, if you need to reach me, davelandry.com/contact. I want to thank you for watching. May the trend be with you.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.